world watches in shock as President Trump's sudden trade war with Denmark has sent global markets into a tailspin, wiping out nearly $90 billion in value overnight. What began as a diplomatic spat over Greenland quickly escalated into one of the most unexpected financial crises in recent history, catching investors, policy experts, and everyday Americans completely off guard. The fallout from this confrontation between the United States and its longtime Nordic ally would reshape international relations and economic policies for years to come. But how did such a broken relationship come about? And what are the deadly consequences facing the US? Let's find out. Trump's aggressive policies towards Denmark. Relations between the United States and Denmark took an unexpected turn that now has America facing a $90 billion crisis. It all started when President Donald Trump showed a growing interest in Greenland, the massive ice-covered island that is an autonomous territory of Denmark. What started as rumors soon became international news when Trump confirmed he was seriously considering the idea of the United States purchasing Greenland. Essentially, it's a large real estate deal, Trump told reporters. He believed Greenland's location and natural resources made it strategically valuable to the United States. When Danish Prime Minister Mette Frederiksen heard about Trump's interest, she firmly rejected the idea. She called the proposal absurd and emphasized that Greenland is not for sale. Frederiksen added that Greenland belongs to Greenland and its people, not Denmark, and certainly wasn't available for purchase. Trump didn't take the rejection well. In a move that shocked many international observers, he canceled a planned state visit to Denmark just 2 weeks before it was scheduled to happen. On Twitter, he wrote that since the Prime Minister had no interest in discussing the purchase of Greenland, there was no point in meeting. The situation escalated when Trump threatened to impose heavy tariffs on Danish goods. He suggested taxes as high as 25% on products coming from Denmark to the United States. This worried Danish business leaders since America is one of Denmark's largest trading partners outside Europe. "I know Denmark well. Denmark is a very wealthy country," Trump said at one point. "They're losing almost $700 million a year carrying Greenland. That's a lot of money for Denmark." Trump also directed his administration to explore legal options for claiming Greenland. Some reports indicated that officials were asked to look into whether the US could assert rights to the territory based on national security concerns or historical claims. These discussions never resulted in formal policy, but they created significant tension. Economic experts warned that Trump's threats could trigger financial problems for Denmark, with potential tariffs threatening nearly $90 billion in trade and investment relationships. Danish stock markets briefly dropped following Trump's comments. Former US Ambassador to Denmark, Rufus Gifford, criticized Trump's approach. "This is just not the way you treat an ally," Gifford said in an interview. "Denmark has been with us in Afghanistan and Iraq. Danish soldiers have died alongside American soldiers." The Danish government maintained a measured response throughout the conflict. Foreign Minister Jeppe Kofod emphasized that Denmark and the US remained close allies despite the disagreement. "We have a good dialogue with the US on many issues," Kofod stated, trying to reduce tensions. Behind the scenes, US military officials continued working with their Danish counterparts at Thule Air Base in northern Greenland, which serves as an important radar station for missile defense and space surveillance. The conflict eventually cooled down when other international issues took center stage, but it left lasting questions about the reliability of traditional alliances and highlighted how quickly international relationships could change under Trump's administration. Though the tariff battle faded, it exposed deeper uncertainties in global politics. Uncertainties that would soon resurface in a surprising place: Greenland. Greenland, strategic importance and US interests. Greenland is a really big island, covered mostly in ice. It might seem like just a frozen place far away, but it's actually super important in today's world. Let's look at why so many countries, especially the United States, care so much about this icy land. First, Greenland sits in a key spot on the globe. It's right between North America and Europe, making it a perfect watching point for military activities. As the Arctic ice melts because of climate change, new shipping routes are opening up. These new water paths could save companies lots of money and time when moving goods around the world. Whoever controls Greenland gets to have a say in who uses these routes. Under all that ice, Greenland is hiding treasure. Not gold coins, but valuable natural resources. The island has huge amounts amounts of rare earth minerals, which are needed to make phones, computers, and electric car batteries. Scientists think Greenland might have about 25% of the world's rare earth elements. There's also zinc, lead, iron ore, and possibly oil and natural gas. As the ice melts, these resources become easier to dig up and use. When Donald Trump was president, he shocked everyone by saying he wanted to buy Greenland from Denmark. Many people laughed, but experts understood that Trump was thinking about these resources and Greenland's strategic location. China had already been trying to invest in Greenland's mining operations, and Russia was building up its military presence in the Arctic. Trump didn't want the US to fall behind. The US already has a military base in Greenland called Thule Air Base. This base helps track missiles and spy on other countries' activities in the Arctic. Having more control over Greenland would give America an even bigger advantage in watching what Russia and China are doing. When Trump suggested buying Greenland, Denmark's leaders got upset. They firmly said Greenland wasn't for sale. This created a diplomatic mess between the two countries, which had been allies for a long time. Trump even canceled a planned trip to Denmark because of this disagreement. This tension between the US and Denmark played a part in triggering a $90 billion financial crisis. How? When Trump publicly fought with Denmark, investors got nervous about stability in the region. Danish companies lost value on the stock market. Trade deals between the US and European countries became uncertain. The value of mining rights and potential development projects in Greenland suddenly seemed risky, causing investors to pull their money out. Companies that had already invested in Greenland's resource development saw their stock prices drop dramatically. The uncertainty spread to other Arctic investment projects, and soon the total loss in market value reached around $90 billion across various industries and countries. This situation shows how something that seems simple, like wanting to buy territory, can have huge economic ripple effects. The crisis highlighted how valuable Greenland really is, not just for its location and resources, but as a symbol of power in a changing Arctic region where countries are racing to claim influence as the ice melts away. The true cost of this geopolitical gamble soon became clear, and it came with a $90 billion price tag. Economic impact: the $90 billion crisis. The numbers were staggering. $90 billion. That's what experts were calling the Trump effect on the American economy. It wasn't just a number on a page. It represented real jobs, real businesses, and real people caught in the crossfire of international politics. It all started with that fateful tweet. When President Trump publicly attacked Denmark after they refused to sell Greenland, nobody expected the economic avalanche that would follow. What began as an awkward diplomatic moment quickly spiraled into something much worse. American tourism to Denmark plummeted almost overnight. Hotels in Copenhagen that once welcomed thousands of American visitors suddenly had empty rooms. Tour guides who specialized in showing Americans the famous Little Mermaid statue and royal palaces found themselves without customers. One Danish tourism official said it was like someone turned off the American faucet, but the damage didn't stop there. Danish companies that had been planning to invest in American factories and businesses suddenly hit the brakes. Why put money into a country whose leader had just insulted yours? Major Danish firms like Maersk, the shipping giant, scaled back their American operations. Novo Nordisk, which makes insulin for millions of American diabetics, reconsidered expansion plans in the United States. The export market took a massive hit too. Danish butter, cheese, and other food products that normally filled American grocery shelves became harder to find as trade relationships soured. American businesses that relied on Danish technology and design expertise found themselves scrambling for alternatives. We're seeing a ripple effect through the entire economy, explained Dr. Sarah Jensen, an economist who studied the crisis. When you damage a relationship with a trusted ally like Denmark, it's not just about politics, it's about people's livelihoods. In the Midwest, where Danish wind energy companies had been building massive wind farms, projects ground to a halt. Thousands of construction workers and engineers who had been promised good-paying jobs suddenly found themselves unemployed. One Iowa farmer who had leased his land for wind turbines said, "I was counting on that money to send my kids to college. Now what?" The stock market reacted too. Companies with strong Danish connections saw their share prices tumble. Investment firms warned their clients about the Nordic risk factor in their portfolios. Perhaps most concerning was the signal it sent to other countries. If the United States could so quickly turn on Denmark, one of its oldest and most reliable allies, who might be next? International investors grew nervous and the dollar weakened. Small businesses felt the pain most acutely. Take Mike's Danish Bakery in Minnesota, a family business that had had imported special ingredients from Denmark for 3 generations. Our costs have doubled, Mike explained, and some things we just can't get anymore. My grandfather would be heartbroken. As the crisis deepened, economists warned that the $90 billion figure might just be the beginning. The long-term damage to America's reputation as a stable business partner could cost far more in the years ahead. What had started as a real estate deal gone wrong was now threatening the financial security of millions of Americans who had never even heard of Greenland before the crisis began. But while the US struggled to contain the fallout, Denmark was already moving swiftly. Denmark's response and crisis management. When the news broke about the financial crisis, Denmark's government jumped into action. Prime Minister Mette Frederiksen called an emergency meeting with her cabinet at midnight. They needed to make quick decisions to protect their country's economy. "This is an unprecedented situation," Frederiksen told reporters the next morning, "but Denmark is strong, and we will weather this storm together." The Danish government immediately set up a crisis team of economic experts. They created a 3-part plan to handle the situation. First, they would stabilize their banking system. Second, they would protect Danish jobs. Third, they would work with international partners to find solutions. The Danish National Bank, which is like Denmark's version of the Federal Reserve, announced they would provide up to 300 billion kroner, about $45 billion, to keep banks running smoothly. They also lowered interest rates to make it easier for businesses to borrow money. "We must ensure that Danish companies can continue to operate," said Lars Rode, the head of Denmark's National Bank. "Our financial system is solid, but we need to take precautions." Denmark's Foreign Minister Jeppe Kofod reached out to allies across Europe and beyond. He spoke with officials from Germany, France, and other European Union countries to coordinate their response. The European Central Bank promised to help if needed. "We are stronger together," Kofod said. "This crisis affects all of us, and we need to work as a team." For regular Danish people, the government created a special unemployment fund of 50 billion kroner, about $7.5 billion, to help workers who might lose their jobs. They also delayed tax payments for businesses that were struggling. Public reaction in Denmark was a mix of worry and determination. Thousands gathered in Copenhagen's main square to show support for their government's actions. Danish flags flew from apartment windows across the country. A poll showed that 78% of Danes approved of how their government was handling the crisis. Many people started buying more Danish products to support local businesses. "We've faced challenges before," said Thomas Nielsen, a factory worker from Aarhus. "My grandparents lived through much worse. We'll be okay if we stick together." Denmark's business community also stepped up. Maersk, the country's largest company, announced it would keep all its employees despite losing money. Other major Danish companies like Novo Nordisk and Lego made similar promises. The crisis also changed Denmark's approach to international trade. The government started looking for new trading partners to reduce their dependence on certain markets. They sent trade delegations to India, Vietnam, and several African countries. "We need to diversify our economic relationships," explained Simon Kollerup, Denmark's Minister for Industry. "This crisis has taught us not to put all our eggs in one basket." 6 weeks after the crisis began, Denmark's quick action started showing results. The value of the Danish krone stabilized, and the stock market began to recover. Unemployment rose slightly but remained lower than experts had feared. While the road to full recovery would be long, Denmark's organized and calm response had prevented the worst outcomes. As Finance Minister Nicolai Wammen put it, "We're not out of the woods yet, but we can now see a path forward." And now, the rest of the world was just beginning to feel the aftershocks. Global market reactions and trade relations. The financial earthquake that started between the United States and Denmark quickly sent shockwaves through markets around the world. Within hours of the news breaking, stock markets from New York to Tokyo showed signs of panic. The New York Stock Exchange saw its worst day in 3 years, with the Dow Jones dropping over 1,200 points in a single trading session. Tech stocks were hit especially hard, with companies that had business ties to Denmark suffering the most. "This is what we call a contagion effect," explained Maria Chen, an economist at Goldman Sachs. "What started as a problem between two countries is now affecting everyone because our global economy is so connected." In Europe, the situation was even more dramatic. The pan-European stock 600 index fell by nearly 5%, with Danish companies losing almost 15% of their value on average. Germany's DAX and France's CAC 40 both recorded significant losses as investors rushed to sell their shares. Trade between the United States and Denmark, which was worth about $12 billion annually before the crisis, came to a near standstill. Danish exports of pharmaceuticals, renewable energy equipment, and food products were stuck in limbo. American companies that relied on Danish parts for their products had to scramble to find new suppliers. "We've had to stop production on 3 of our product lines," said Robert Johnson, CEO of MedTech Solutions, an American medical device manufacturer. "The parts we need from Denmark just aren't coming in, and we can't find replacements quickly." Currency markets also felt the impact. The Danish krone initially lost 12% of its value against the dollar, though the intervention by Denmark's national bank helped stabilize it somewhat. Meanwhile, investors looking for safety pushed the Japanese yen and Swiss franc to 2-year highs. The crisis also affected commodity prices. Oil prices jumped by 8% due to fears about potential disruptions to North Sea oil operations, where Danish companies play a significant role. This led to higher gas prices for consumers across Europe and North America. Investment flows changed direction almost overnight. Foreign direct investment into Denmark dropped by 60% in just 2 weeks. At the same time, Danish pension funds and investment companies started pulling their money out of American assets, selling approximately $28 billion worth of US stocks and bonds. "We're seeing a major reallocation of capital," noted Søren Jensen from Denmark's largest pension fund. "It's not that we want to leave the US market, but we need to manage our risks during this uncertain period." The crisis also revealed how interconnected global supply chains had become. Companies and countries not directly involved in the dispute found themselves affected. For example, Swedish furniture giant IKEA had to delay new store openings because they couldn't get certain components that were manufactured in Denmark. Small businesses felt the pain most acutely. Karen Nielsen, who owns a specialty food shop in Chicago that imports Danish cheeses and pastries, said her business was in jeopardy. "My suppliers can't ship anything, and my customers are disappointed. I've built this business over 15 years, and now it might disappear in a matter of months." Financial experts warned that the longer the crisis continued, the more damage it would cause. The International Monetary Fund estimated that if the situation lasted more than 3 months, it could reduce global economic growth by 0.3% for the year, equivalent to about $270 billion in lost economic activity. "What makes this crisis particularly concerning is its timing," said Hiroshi Tanaka, chief economist at the Bank of Japan. "The global economy was already slowing down, and this dispute could be the thing that tips several countries into recession." As the crisis entered its 2nd month, some adaptation began. Companies started finding alternative trade routes and business partners. New trade relationships were forming, with countries like Canada and the Netherlands stepping in to fill gaps left in both the American and Danish markets. Future implications and ongoing tensions. After the shocking events that rocked both American politics and the Danish economy, many people are wondering what happens next. Let's take a look at what might be in store for former President Trump and Denmark as they both try to move forward from this $90 billion financial crisis. For Donald Trump, this situation has created both challenges and opportunities. Despite the economic fallout, Trump has announced he plans to use this moment to push his America First agenda even harder if he returns to office. He's told supporters that the Danish crisis proves his point about being tough in international dealings. "I'm going to make sure America never finds itself in Denmark's position," Trump declared at a recent rally. "We need to protect our financial systems from these kinds of problems." Trump's campaign team has already added this issue to his platform, promising to create what they're calling a financial protection plan that would shield American markets from international economic troubles. He's also suggested he would renegotiate several international trade agreements to give the United States better terms. Some financial experts worry that Trump's approach might lead to more isolation in global markets, which could hurt international cooperation during economic crises. Others believe his tough stance might actually strengthen America's position in world trade. Meanwhile, Denmark faces a difficult road to recovery. The Danish government has announced a 3-step plan to rebuild their economy after the $90 billion crisis. First, they're creating an emergency fund to help stabilize their banking system. Second, they're reaching out to neighboring European countries for support. And third, they're planning to slowly rebuild their economic relationships with the United States. Denmark's prime minister stated, "We will learn from this crisis and build a stronger, more resilient economy. This is a setback, but not the end of Denmark's story." The Danish government is also working with financial experts from around the world to understand exactly what went wrong and how to prevent similar problems in the future. They've created a special committee to examine their financial regulations and suggest improvements. European Union leaders have expressed support for Denmark, with many offering financial assistance. This show of solidarity suggests that Denmark won't have to face this crisis alone. The tension between Trump and Denmark remains high, with neither side showing much interest in smoothing things over quickly. Danish officials have said they want to focus on fixing their economy before worrying about repairing the relationship with Trump. For everyday people in both countries, the effects of this crisis will likely be felt for years. Americans might see changes in certain imported products from Denmark, while Danish citizens face a tougher economic situation with possible job losses and higher prices. As this situation continues to develop, financial experts around the world are watching closely. Many believe that how these two powers handle this crisis could set important precedents for how international economic disputes are managed in the future.